Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Wednesday morning pre-market webcast. Okay, daily chart, and then we'll really dive into it on the hourly. But I entitled this webcast, "This is why the bulls can't have nice things." And this is why they can't. You can't have nice things when you can't get over the top of 50 and then you can't convert the mid-band. We talked about this yesterday. It's not enough to trade above it. You have to convert it. And the way you convert it is by turning it into support. And the best way to turn something into support and seal it is to take out the next key area, in this case above it, all right, which was at 2150. So you had a couple of trips up to the 2150 area. You did 49 on Monday. You did 49.75 on Tuesday. Can't get through. Then you start doing lower highs. Here was your opportunity. I estimated where the middle band was yesterday. It was about 42.75. Tried to hold it, couldn't do it. Then the bears spent the afternoon and the evening converting it, okay, by getting below it and staying below it, and then taking out the next key level, in this case, below it, weekly pivot. They broke weekly pivot. Now we're trading below. We traded as low as 26 right down to S2 there. You can see it bouncing there at S2, 26, which is not surprising. So now we have to see if the bears can have nice things. Now, traditionally, the bears have been afforded very few luxuries over the last 7 or 8 years. But what they can do here is, now that they've broken weekly pivot, they need to keep it above them. They need price to live below weekly pivot all day long and close below it. Okay, that's not going to be easy. What they absolutely cannot allow to happen would be any kind of a move back to the mid-band. Because what we've seen in the past is, on moves like that, the bears just go to pieces. And that's how you get these V rallies. Okay, they can do, they can retest the breakdown area here, which would be 35s. But if they do that, they got to get back below 32 pretty quick. This needs to be a definitive. This bounce needs to be a definitive lower high, lower low versus this high at 35 quarter. If the bears can actually pull that off, it opens up a move to the lower band in the area of 2120. And it demonstrates that this wants to continue to be a futures contract that wants to trade below the daily mid-band. So remember, one of our baseline assumptions is futures contracts that want to trade between mid-band and lower band are sell rallies. Futures contracts that want to trade between mid-band and upper band are buy dips. So that puts us, really back in sell rallies mode. So the bears had an outstanding opportunity to take this back up to the 68 area and test that prior range high, and they dropped the ball by being unable to get through 50, losing the mid-band, and now losing the weekly pivot. So their backs, the bulls' backs are against the wall in a big way. Bulls had it, bulls blew it, and as we get through today and through the end of the week, now we have to see, can the bears follow through? If you zoom out, I think this is what's happening here. We are in a holding pattern for the election. Okay, we are circling the airport at 15,000 feet, and depending on what happens, we're going to go up, we're going to go down. I don't know, but I would not expect too much super directional trading until then. The Bollinger Bands are tight. Your Bollinger Bandwidth, you can see down in the lower right-hand corner, is 2.1. There's going to be expansion. Okay, how significant that expansion is going to be, I don't know. You never do. You don't want to anticipate direction. That's how you get hurt. But the constant coming back to the middle, I think, has a lot to do with people hedging their bets to see what happens in November. And we're not all that far away. So don't get yourself chewed up in this. Be smart. Control your size. Control your risk. And book handles when you have them. We made our day yesterday. We needed one trade to do it. We had the short on the breakdown from the daily mid band. We got that done, and then when we hit our goal with that, and in this type of market, sometimes that needs to be enough. So have a small, have a reasonable goal, hit that goal, and then move on to the next day. That's how you survive choppy markets. All right. Everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website, princetontrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.